Hello from Trend Signal for our review of the data and events the week beginning the 29th of June. Month end on Tuesday. In fact, the quarter end as well. And it looks like next quarter could be pretty volatile if the European Central Bank fails to calm the markets. A lot to talk about this week. Significant moves on Monday morning in reaction to the Greek news over the weekend, which really sharply increases the chance that Greece could exit the euro. Equities have been smashed. DAX was down 500 points from the opening. S&P down 25 and the FTSE 150 lower. They have rallied in the first part of the morning. Core bonds seeing a big flight to quality with a Bund up at one stage 200, but again, in similar to the equities, the Bund has given up some of those gains. Conversely, peripheral Eurozone bonds slumping. So the Italian BTP, that was significantly down at one stage, but it recovered a little bit to being down about 180 points. The euro fell sharply overnight on Sunday night, hitting a low of 109.5. Perhaps quite not as low as one would have expected on the back of this sort of news, but it actually then rallied, trading well above 110. In fact, getting up to 110.80 at one stage. As I said, it's a little bit surprising it hadn't fallen further, and even more surprising, I guess, that it's rallied. Not just Greece this week, but markets may pay little attention elsewhere. Being the first Friday of the month, normally very important is the non-farm payroll data. That's the US employment data. Out on Thursday this month, not on Friday, though, as it's a bank holiday in the United States, being Independence Day. In fact, Independence Day is on Saturday, but they have the nearest working day off for a holiday, which is Friday. As I say, not all about Greece, but I think it's likely that Greece will dominate in a very big way. Risk aversion is the buzzword, flight to quality another buzzword. Systemic contagion, not such a problem this time round. 4 years ago or 5 years ago, there was a serious concern that problems in Greece could spread to Spain, Italy, Portugal. But I think a lot of these countries, in fact, most of Europe has insulated itself. In fact, all of Europe's insulated itself from any contagion issues. So commercial banks and governments have now taken steps to avoid that happening. Those peripheral countries such as Spain, Italy and Portugal, they're coming under pressure first thing Monday, but they do not have any major systemic contagion risk there. Other news over the weekend, normally on its own, would have really bolstered the markets. The People's Bank of China cut the benchmark interest rate by 0.25% or 25 basis points to a record low, 4.85%. That's a sign of the times as growth subsides in the world's, debatable largest economy. The central bank, that's the People's Bank of China, also lowered the amount of reserves certain banks are required to hold by 50 basis points or 0.5%. So initially, quite positively received. Certainly the Chinese shares jumped 2.3%, but in late trade on Monday afternoon in China, the Shanghai in fact gave up those gains and was in fact down, I believe 1.5% or so. So just looking at the Greek situation in detail, it seems that Tsipras pulled his team out of Friday evening talks last week and then surprised the markets by calling for a referendum on the new bailout terms being demanded by the international creditors, which really ups the chance of a Greek exit, or Grexit as it's called. However, interestingly enough, one of the polls released over the weekend suggested a clear majority of Greeks would actually vote to support the agreement offered. But obviously the government would campaign against accepting the Troika's proposal because they basically rejected themselves anyway, so it would be nonsense if they turned around and accepted it. Saturday, the Euro finance ministers basically said that the referendum call was not valid or irrelevant. Then they rejected a request from Yanis Varoufakis, the Greek finance minister, to extend the bailout terms beyond until the vote is held. And we then had this emergency liquidity assistance, ELA, which is currently standing at 89 billion. that was maintained but not increased in any way, which basically means that Greek banks will not be getting any more assistance because they're at their limit, which basically means that banks can no longer pay depositors who want to withdraw their money from ATMs, which is one of the reasons why the markets have taken real fright Monday morning. In fact, I think it's been declared a bank holiday, in fact a bank holiday for the rest of the week, so none of the Greek banks will open all this week, remaining closed until at least the 5th of July when the referendum takes place. So banks not bust, just closed. They could be bust on Wednesday though, depending on what happens with the Greek default that is looming. So for now, no one can withdraw much from the banks, and not many ATMs actually have cash anyway in Greece, but there is a maximum allowable amount that can be withdrawn of 60 euros per day. 60 euros per day. Other news in Athens, they've shut the Greek stock market in Athens, which is closed on Monday. A little bit ahead in the sands, really, but we understand that that will be reviewed on a day-by-day basis. Data this week, obviously this is point of the exercise in this webinar, just to explain what data is coming out. It is an important week for data, or it normally would be, with the non-farm payroll this week, as I said, coming out on Thursday, not Friday as it would normally be. We have ADP, is the warm-up, as it were, for the main event this week. Again, slightly more volatile number, ADP, but we're looking for a slightly stronger number there. The main number from the Bureau of Labour Statistics, the non-farm employment change, we're looking for a figure of slightly, certainly less, 50,000 less than the previous month, which is a bit of a surprise. I think any number that is around that level will, I suspect, support the notion that there could well be a rate hike, the first rate hike for 9 years in September. In fact, William Dudley of the New York Fed has gone on record as saying that the improving data has significantly increased the chance of a rate hike in September. So markets are going to remain sensitive to any overtly positive or negative data releases, and obviously non-farm payroll being probably one of the most important on the month, that will definitely hold sway there. Notwithstanding, obviously, the overriding effect of the Greek crisis, of course. By Thursday, we're going to know how much, whether they've defaulted and what the effects are and what action the European Central Bank is going to take. So other than that, well, obviously the one bit of data that's missing from this calendar is obviously Tuesday. We can probably put it in as Greek crunch time. Tuesday, I don't know when the payment cutoff is for payments on European transactions, but I think it's probably around 4 o'clock. So we will know by the close of the market on Tuesday whether Greece has defaulted on this $1.5 billion payment to the IMF. So Tuesday, obviously a very key day. There is other data out, manufacturing PMIs from China and in the UK on Wednesday, but Thursday is the big day, really. And it's actually followed up with a speech by the European Central Bank President Mario Draghi, although the topic is not so, it's probably quite obscure, but in fact it may well give an opportunity for him to comment on that. So that'll be closely watched at 4 o'clock on Thursday afternoon. And that's it, really. So a big day, a big week this week, a big day on Tuesday, but a very big week for the markets. This referendum, which is, whilst it sounds sensible and may well be supported by the population in Greece, it is coming at a time when the markets may well have decided how events shape in Greece. So we will see how the markets react this week. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.